Palantir stock. That's what we're talking about here today in this video, guys. Obviously, the earnings are out from Palantir. I want to go through all the numbers. I want to share some good numbers with you guys that you might have saw, or maybe you haven't seen these numbers. I want to share some bad numbers because Palantir definitely had a couple worrisome numbers that I want to show you in this video here today. I am a shareholder of Palantir. It's not a core position for me, but it is a position nonetheless. So I want to give my opinion on this. By the way, the Chef earnings are obviously coming out here very soon. I'm going to do a super in-depth video on the Chef tonight, whether the earnings are good, bad, whatever. I'll give a super in-depth video later tonight on that. I want to listen to the earnings call. I want to have time to digest it and put a really well done video together for you guys tonight in regards to that. So Palantir, it's down about 13-14% here today. I think everybody's kind of seen the move down. Okay. Now it's very important to understand the game of Wall Street and how the game of Wall Street works, especially in regards to earnings for companies, okay? So Palantir, this is a 3-month of Palantir, even after today's 13%, 14% drop, whatever, this stock is up over 33%, okay? And so the issue, if you're talking about the game of Wall Street and the game of stock prices, is this stock went beast mode the last few months, okay? So basically going into this earnings, Palantir would have had to report pretty much a perfect quarter with nothing that worries anybody about anything in regards to these numbers essentially, right? And that did not happen here, okay? And we're going to go through the numbers. And so therefore, you basically are setting yourself up for only downside unless you come in with absolute perfection. Okay, and that's the game of Wall Street. These earnings, they move stocks around big time, 10, 20%. And if you're running into that earnings, shoot, you better come in with perfection. Now, this happens all the time in the market, you get a stock that sells off super heavy into earnings, essentially, right? And it just keeps going down and down and down, and then all of a sudden the earnings come out, and maybe the earnings are even bad, and then the stock price goes up, and people are like, how did this happen? Like, why is that stock price up 15%, 20%, right? You're already priced in the end of the world. All of a sudden, the shorts pile on. You end up getting a short squeeze situation. And next thing you know, a company comes in, reports bad numbers, and the stock price flies high because it had already been devastated going into the earnings. It had already priced in the worst case scenario for that stock. So that's something to kind of keep in mind always moving forward when you just kind of are paying attention. So you understand, like, when these stocks move on earnings, you understand kind of what's going on there, which I think is very, very important. Now, for me personally, I'm still up about 23% on the shares, but I'll be honest, I didn't like the move Palantir was making in that straight up. I mean, I was up 40% plus just a few trading days ago on the stock, which, I want to build Palantir into a decent sized position. I don't want to make Palantir necessarily one of my biggest positions, but I want to put like $50,000 or maybe $100,000 in it. It's not fun to also have to try to buy more shares of a stock when it's gone up like 40% in a snap of a fingers, right? I mean, this is a stock that I acquired shares on June 17th. I acquired shares on July 7th, right? And so, that baby was just going up in a straight line. So I actually welcome this stock to go down here in the short term. So maybe I could build out a little nicer position because I don't own anything like a Palantir. I don't own anything that's really like B2B for the most part, B2G, right? Business to business, business to government in the software as a service type business model, right? I don't own anything in that space. And so, to have something like this is nice diversification to my portfolio, but it's not fun to have to try to buy more shares when they've gone up like 40% in a matter of like a month or two, right? Okay. Alrighty, guys. So let's get into the numbers here. And I'm going to also share a perspective that I think is very important for all the potential longs and the longs of Palantir. Okay. Shares of Palantir Technology dropped Monday after the data analytics software company provided guidance for both the September quarter and the full year that was shy of Wall Street estimates, amid signs of softer demand for both government and international customers. That's what I talk about. If you're flying high going into an earnings and you're up 30-40%, you can't come in with any numbers that are shy of Wall Street estimates. They would have had to come in with, likely, if you want to see the stock price up, they would have had to come in with beats in regards to their next quarter in terms of their guidance and for the full year. If you don't come in with that, your stock price has nowhere to go but down, essentially. The good news is that for the second quarter ended in June, Palantir posted revenue of $473 million. That's up 26% from a year ago and ahead of the company's target of $470 million. Analyst consensus came in at $466, so that's a nice beat there of about $7 million. Okay, Palantir said commercial revenue was up 46% from a year ago. To me, that's the exciting part of their business, to me personally. obviously the government business is important for Palantir, but that's not why I'm in this stock. I'm in this stock because I look at Palantir as a company that I think every Fortune 500 company, every large organization, and maybe even every mid-sized organization over the next few years is going to have to at least consider bringing Palantir into their business model. And if they do that, I think Palantir is going to be incredibly sticky, and I think companies are going to use Palantir for potentially years to go in the future, if not decades to go in the future, right? Because Palantir signs these long-term contracts of 3, 5, sometimes even longer, years out. And so I think it's going to be a very, very sticky business model. So that's why I'm personally in this stock more than the government side of the business, is because of the commercial side of the business. With U.S. commercial revenue up 120%, that's where they're growing like a beast, okay, is the U.S. commercial, 120% growth. U.S. government revenue was up 27%. Overall, U.S. revenue was up 45%. So right off the bat here, if we're, without knowing any more information, if we hear a company grew 26%, but the U.S. revenue grew 45%, then we already know international is not good. Not good at all, okay? Bottom line there. Based on previous disclosures, the second quarter results imply international revenue of $183 million in the quarter, up just 4% from a year ago period, while government revenue was up 13%, okay? That's a disaster. So basically, international business is not good. I mean, actually very bad right now for the company. For Palantir to come in on a 4% growth rate for international revenue is no, okay. Palantir always needs to be growing double digits, at least pretty much this whole decade international. So this is just very important to see, very kind of disappointing to see like a 4% type number there, right? In the March quarter, commercial revenue had expanded 54%, while government revenue, it grew 16%, but that's in the March quarter, okay? The problem is we're not in the March quarter anymore. And so, yeah, that's a huge, huge drop off for revenue to only be up 4% in the current quarter year over year. Palantir said in the second quarter, adjusted income from operations was $108 million, a margin of 23%, above the company's target of 20%. So that's good to see. That's definitely good news. Adjusted free cash flow came in at $61 million. That fell short of Wall Street consensus of $82 million. So pretty big fall off there, but to see positive adjusted free cash flow is a good thing. The company posted an adjusted loss of 1 cent a share versus consensus earnings of 3 cents, largely reflecting the loss of 4 cents a share on the company's investment portfolio. It's important there, okay? It's very important. That's why they took that loss there, okay? Mostly stakes in pipes or private investment public equity in connection with companies that basically came public via mergers with special acquisition companies. Palantir suspended its SPAC investment program. I think that's important. I think that's very important. And the reason I think that's very important is this was actually something that was highly debated in Wall Street circles around Palantir. And a lot of people did not like them being actually involved in any of these SPAC situations. And so it was kind of like almost like a dark cloud around the company. So as somebody that's, bought some shares of stock and is likely going to buy more shares of stock, I actually don't mind them, putting that whole thing on the side, because it was a very misunderstood thing they were doing there. They'll just call it that. And it was a dark cloud, and a lot of people looked at that from a very negative angle. And started to not even consider Palantir because of what was going on there, which, it is what it is, right? And so if you're going to attract more investors over time and you're going to get a more positive thing going on with your company, right? You can't have any dark clouds around your company. And so that was just, it was a dark cloud, to be quite honest. And anybody that's really brushed up on Palantir knows that was truly a dark cloud around this company, okay? The company said that in the quarter, it closed new business of $792 million in total contract volume, including $588 million from U.S. customers. Palantir said its U.S. customer count has grown 250% from a year ago to 119 from 34. That's major growth, okay? And like I said, I think my personal opinion is, when companies get used to using Palantir, I think it's going to be a very sticky product. I think it's going to be very hard to ditch Palantir once you start using it as a big organization. David Glazer, Palantir's chief financial officer, said in an interview that the current global geopolitical and macroeconomic uncertainty, quote, lines up exceptionally well for us in the long term, okay? But he also noted that the company is, quote, chasing very large deals from government clients, and that timing of many of these projects is more uncertain than we might like. That's part of the reason why I'm not the biggest fan of the government business. Obviously, it's important, and obviously, I'd rather have it than not have it. But the problem with the government business is it screws up growth rates big time for Palantir. And it can make Palantir look like they're growing way more than they are at certain times or way less, right? Because if you land one of these massive government contracts, I mean, it can literally make your numbers look way better than you had anticipated, right? On the flip side, if you don't land any of those big deals because it's dragging on, because we know doing anything with the government, it drags on, right? So if you're in that sort of situation, well, shoot, all of a sudden, your numbers aren't quite there that you thought you were going to have, because this government deal that you thought was going to likely close still hasn't closed and is still a drag on in the process, right? And so that's the annoying thing about ever owning a stock that has to deal with government. And I think this is just an important thing that if anybody's watching this video, even if you own Palantir, don't own Palantir, I think it's important to always remember, if you're dealing with companies that get substantial amounts of revenue in their business from government, it's going to screw up growth rates, and you're going to have some quarters that look way better than anticipated. You can have some quarters that look way worse than anticipated because of government, okay? We know government usually moves like a snail's pace, okay? And yeah, when you get some of those deals, it is beautiful, but it doesn't always, it takes a while sometimes, okay? Glazer noted that the international business was affected by the strength of the U.S. dollar, important, although the company, and by the way, that's an issue for basically just about every U.S. company, is the dollar's so strong right now that it's hurting all companies' numbers across the board, okay? Although the company doesn't provide a currency-adjusted figure, which I think is strange because literally pretty much every other company provides a currency-adjusted figure, so I thought that was a little strange. He added that Palantir is seeing some slowing business in Europe as a result of the strength of the dollar, which makes upselling more challenging. It's important, okay? Now, how long does the dollar, stay this strong? I'm not a currency expert, so I don't really have an opinion on that. Your guess is as good as mine as far as that goes, but it is something companies like a Palantir are having to deal with right now. For the third quarter, Palantir sees revenue of $474 million to $475 million. That's a very specific number there. Holy smokes, that ain't no joke. Like literally, I don't know if I've ever seen such a specific number in my life in regards to a company giving guidance. Like usually, if you were to do this, usually it'd be like, we're going to be somewhere between 470 million and 480 million, like something like that. 474 to 475, I'm like, what? Like that's, whoa, okay. With operating income of $54 million to $55 million, falling shy of Wall Street consensus of $500 million in revenue and $145 million in non-GAAP operating income, okay? And so, yeah, you come in at, let's call it 474 and a half. Wall Street's at 500 mil, your stock's moving down when you're flying high into earnings. There's just no doubt about it. Now, if Palantir was $7 going into these earnings, I think we're in a very different situation. I wouldn't be surprised if Palantir stock was up 10 to 15% today. But when your stock is up, 40% plus in a matter of a few months, shoot, you can't come in with a $25 million miss on revenue projections there, okay? Palantir projected full year revenue of $1.9 billion to $1.02 billion. Like, my gosh, these numbers are so specific. Come on, man. With adjusted operating income of $341 million to $343 million. Analyst consensus has been $1.96 billion in revenue. Okay, so they're shy there. In non-GAAP operating income of $531 mil. The new guidance implies full year growth of 23%, which is not what most Palantir shareholders are looking for, because Palantir is a company that has, I don't want to say promise, but they said they're going to grow 30% a year, okay? And Alex Karp, CEO, has said they're going to grow 30% a year. They're basically not supposed to grow 30% this year, okay? So that's not something the shareholder base likes to see when numbers are missed like that. And obviously, there's a lot of drama going on out there. We got government contracts that are taking forever. Obviously, the operating environment is not the best with the wall of worry and all those things. And obviously, we know Europe's very, very weak right now. Very, very weak. And so this is all something that obviously hurts Palantir's business model. But at the end of the day, we don't like to see that, right? In previous quarters, Palantir had projected annual growth of 30% or better through 2025. Glazer confirmed that the company is not repeating that forecast in results announced Monday. So, that's an important matter there. Basically, the company, do they even plan to grow 30% a year? I don't know. If you take that away, maybe they're not. Maybe now they're expecting something like 25%, 23%. 27%, whatever, right? But at the end of the day, like these numbers add up over time, right? And so if you're running a long-term projection model for Palantir, let's say you're running a 3-year, 5-year, 7-year, 10-year projection model, well, there's a big difference between a 30% growth rate and let's say a 23% growth rate or a 25% growth rate. You have to adjust all your numbers, and all your numbers are going to be substantially less over a 3, 5, 7, 10-year span, like substantially less. It makes a massive difference between a 23% growth rate and a 30% growth rate. So now that Wall Street's going to have to go back to the drawing boards in regards to Palantir and run their models and things like that and try to figure out, is this a good deal at $9? Or is it really only a good deal at $5 or $7 or $8, right? Or $10 or $15. So that's going to be kind of a process we have to work through in regards to Palantir now. Okay, now I still got to listen to the Palantir conference call, which I think is very important. Now, for long-term bulls on Palantir, right? You got to ask yourself, if this company grows at 23%, let's say a year, or 25% a year, instead of the 30% that was projected, right? Are you still a happy shareholder? Do you believe this company's net income over the next 5 years is going to still get to a place that makes this market cap look like a joke, right? Which, if you think Palantir's net income over the next 5 years is going to get to, let's say $2 billion or more, then today's market cap looks like a complete joke. And, Palantir is likely going to have to climb to like an $80 billion to $100 billion type market cap if that was the situation. Now, if you're only projecting that, let's say 5 years out, Palantir is doing like 500 mil net income, then it's not so attractive, right? Because then you're basically paying a 40, that'd be like what, a 40 PE for 5 years out. That's not attractive. So, you got to run your own models here and kind of figure out if this is a deal. Now, if you think this company's still getting to a couple $2 billion of net income over the next 5 years or so, then, obviously this is a pretty good opportunity, and you should welcome shares being lower in the short term because you'll just get to pick up a lot more shares for a lot cheaper price, obviously, which is an ideal situation for any long-term shareholder who wants to build a major position in a company like that. So just kind of some food for thought there, okay? If you're looking to join us in the private stock group, if you didn't know, we have a Discord chat essentially where we talk about a bunch of different stocks, and one of those is Palantir in there. So if you want to connect with all Palantir shareholders and talk about Palantir, you can apply. That will be pinned comment down there. You also get access to all my course curriculums for becoming master stock market, dividend investing mastery, and all those sorts of things as well. So if you're looking to join us in there, check that out and apply with pinned comment. Much love as always, and have a great day. Chef video coming later tonight.